Welcome to Witham Sounding Board, a podcast sharing powerful business tips, insights, and trends for those seeking to become a rock star in their industry.
We are back at it again for another edition of Hot Topics. I'm your host, Aaron Slaughter. And today we have my dear friends, Mr. Dave Dorsey and Ashley Hall, with us again. Today's episode is more of a continuation of a previous topic that we recorded because we've received a ton of questions and calls just about more information on the Department of Labor's ICAP and CAP audits. So we just wanted to keep the party going. Again, thank you for being here with us. And I'm just going to go ahead and jump right in. So our last episode went through some of the different questions that you'll see and issues that you'll run into when you're dealing with an ICAP or a CAP audit. But I wanted to spend some time today talking about what are some of the findings that Department of Labor may find after they've finished their investigations.
That's a great question, Aaron. And unlike much of the CAP process that we don't know, this one we do know since all of these letters are public information. So we actually go through and read the CAP and the ICAP audit letters that are posted to OLMS, and the range of the types of findings that they could have is extensive, but we generally see a lot of the same ones. So probably the most frequent one we see throughout the letters is related to record retention. The DOL requires that records be maintained for 5 years. And so often we're seeing findings about information not being provided or available or retained that long. Other common issues that we see in these letters would be that there's maybe improper support around officer and employee compensation and related allowances or expenses. There's recurring themes when it comes to incorrect responses to questions on the LM reports. We've also seen pretty frequently where unions are inadequately bonded. So that's another recurring one. So there are several recurring findings that we see across the letters, but I'll maybe put those few at the top of the list.
Okay. So I hear words like record retention, and I can tell you that often I get asked questions about record retention. How long should I keep this document? What type of document should be kept in, and so on and so forth. But that's a pretty wide area. Can you speak at all to some of the specifics in detail for what you mean when you say record retention is something that the Department of Labor usually finds as an issue?
Yeah, for sure. Again, labor laws require that records be retained for 5 years from the date the LM is filed. So we would, from a best practices standpoint, just say 6 to keep to play it safe. And what they're looking for, right, is authorization and support for every dollar that goes out of the union, support that there's evidence of governance and controls. Probably the area in particular with record retention that drives a lot of the findings is specifically related to credit card and expense reimbursement documentation, because the DOL's requirements for that are quite a bit more strict than what applies to other businesses or is more strict than the IRS. So let me press into that a little bit more, if you don't mind, which is that the credit card statements, for example, cannot be used as support for the charges themselves. That statement is support for payment of the credit card, but the DOL is going to want original individual receipts for each of the charges made on a credit card during that period. And then they are even more detailed. For example, for meals, they are expecting that the receipts are itemized and that documentation is being captured related to those meals about what the purpose of the meal was, who was there, and their titles. So there's just a lot more detail that they're looking for, particularly when it comes to meal expenses, credit card expenses. That's often where I see a lot of the record retention findings.
And Aaron, if I could make a comment about the credit card activity itself, people who are incurring a lot of these charges are travelers. They're folks that are trying to do union business, whether it's in their town, the town next door, or across the country. They've got a busy life, and and for many of us that travel, we realize that trying to keep all those little slips of paper are sometimes quite challenging. But it's important, and I think unions need to remind their employees and their leaders that this isn't because the accountants in the union want to have them. It's because the government requires those. Every transaction has to have a written record. And so I think it would be helpful for unions to remind their personnel that, one, that they're necessary, and two, why they're necessary, and have everybody work on the same team to try to get them. And I think the department, if they've realized that a union has done everything they possibly can to get a copy of it. For instance, did you call the hotel and get a duplicate of your hotel folio or not? Yes or no? If you did, well, maybe that would be sufficient enough if you happen to be missing that one. Did you call the restaurant to try to get a duplicate? If the answer was no, then the government's probably going to push back and say, you really didn't try very hard here. And that's where we see, the mindset of the government shift from those that are really trying to go above and beyond versus those that don't really give the appearance that they are too worried about keeping those records.
No, that certainly makes sense to me. And I can speak from a personal standpoint. I got a stack of receipts right now that I need to put in for my own expense report. So thank you for sharing those words. I know that we as a firm, as a Witham, we have a couple one-pagers that we can also send out if anybody's interested on record retention from the union's lens. So if you're interested in that, please reach out to Dave or Ashley or myself.
Hey, Aaron,
one thing I'll note here is that OLMS posts compliance tips online. And so what they're looking for in the form of documentation, it's not a secret, right? So by going through those compliance tips, which are specific to electronic records, to travel expenses, to credit card expenses, it is outlined as far as what those expectations are how unions should be capturing that information.
And sorry for stepping on you there, Ash. We were both excited to jump in here on the policy thing. The comment I would make is that I certainly encourage unions to have a record retention policy. I encourage them to individualize it as much as they can, but realize that their policy can't be more lax than the Department of Labor's expectation. Their policies can require more detail than the government, but it cannot require less. In other words, a union can't say, oh, well, our policy says I don't have to keep receipts, therefore I'm not going to. That won't fly. And so let's get that policy, because really what you don't want to be is as someone that has a policy in your union and then you're not following what your own policy says. So let's make sure we keep our policies updated, that we follow the policies, and we educate our employees and our officers on those policies.
That is wonderful. So I also heard you mention another common area of findings were just incorrect answers. And actually, I've heard you speak about this in conversation. I know you mentioned this during the other episode that we recorded, and you've also mentioned it today. Just talking about areas where the Department of Labor can dig their heels in. What are some of the questions that you see often incorrectly answered, or something that may lead to a further investigation?
Good question. So, Aaron, remember when the investigators are coming in, they're not only looking at union records, but they're looking at the LM report to see that what's being reported there is accurate and follows the LM instructions. So that's within their purview. Part of that is, in particular, like the questions page. And so that more specifically is what I was referring to. And I guess there's maybe two questions I want to highlight as far as where we see the most chatter when it comes to the cap letters and discussions with the investigators. One is it's on the LM2 question page. It's question 15, which asks, during the reporting period, did the labor organization acquire or dispose of assets in any manner other than purchase or sale? So many unions acknowledge that perhaps retiring assets or writing off old assets that are fully depreciated would fall in that. But a lot of unions miss that this would also include like member giveaways or swag or giving away membership items. And sometimes that often gets lost and it comes up in the investigation. So just a reminder that that description of what is being given away to whom and the amount would be included as a response to that question, with the corresponding records available for the investigator to review in their office. The other question that we have repeating comments in the cap letters is question 18, which asks that during the reporting period, did the labor organization have any changes in its constitution and bylaws other than rates of dues and fees and practices and procedures listed in the instructions? The reason I mention this one is because often unions will select yes correctly because there were changes. When there are changes, OLMS requires that the updated constitution and or bylaws, whatever were changed, is uploaded and attached to the LM report that year. And that attachment of those files is often what gets missed. So they'll see yes without the attachment. So that can be a really easy one for unions to make sure that they're looking for, just to avoid getting any kind of inquiry or sparking a further investigation. So I'd say those are maybe the two where I see most recurring findings, but Dave, maybe I'll just ask you if you have any others that you see or comments on either of those from your experience.
Well, I'd like to comment on each one of the items that you made reference to, Ash, and specifically with regard to the giving assets away. A lot of unions like to recognize their retirees. They've worked 25 years, 30 years, 35 years, and they'll have a ceremony for them, and they'll give them. A lot of our clients will give out watches that have an affiliation of the union on them. And you've got to ask your question, if we provided something like that to a member or a retiree in this case, did we charge them for it? If the answer is no, then it requires a positive answer to this question with a description. And then our record keeping requirement is that we have the item that we gave away and the name of the person we gave it to, part of our record keeping requirements. The other thing that I know a lot of unions do is they have door prizes at their membership meetings, at their holiday parties and picnics and all those kinds of things. And there again, we're not selling those items, we're just giving them away. So there's another area where you have to respond yes, and then provide some detail and record keeping with respect to who received those items. On the Constitution and bylaws section, I know I've spoken to the government about this many times. Ashley was spot on by saying that they want unions to provide these things, even if they checked yes and didn't provide the copy 2 years ago. Go ahead and send the copy in now. You can do that through the electronic system. There's a mechanism for doing that through the electronic reporting mechanisms that they have. The comment I wanted to make is that if your national or international union changes your constitution, that as an affiliate of that constitution, you're generally somebody who's affected by that. And the question becomes, do we have to report those and include a copy of that as well? And the answer is, for a local union that's affected by it, you're required to mark yes and put something in your report like this, that during the year, our union changed its constitution and our parent organization is filing those changes on our behalf. So it would be the parent organization that would include the copy, not the local. The local would be responsible for its own bylaws, but not the national constitution. I hope that made sense.
It does. It does. And when I hear instances of incorrect responses, I know that the door is probably open for where the union takes a stance and the Department of Labor may take a different stance. Is there any way to get your legal involved for them to push back or maybe challenge what may be seen as a finding or potential discrepancy and have them weigh in on this?
Well, you can. There's nothing that would preclude a union from doing that. If it's not compliant with the LM instructions and what is expected to be reported, really the only reason for not following those instructions is if there's confidential information that would become available that shouldn't be. So particularly with these questions, that's often pretty rare. But if that exists, sure, you can explain that to investigator and see if they agree that that information is too confidential to have made public. So it really just depends on what information was excluded and why and how that compares with what the DOL is expecting as far as disclosures.
Got it. Thank you. So another area that you mentioned that is a common finding is just about the bonding and the coverage and what's going on with unions insurance. And I know that that's something that we take a look at when we're performing services for unions. Can you speak at all about just some of the common findings that happen to be in this arena?
Yes. Yes. And Aaron, like the record retention, this one's not a secret either. This you can find by just Googling DOL requirements, bonding requirements for unions. But let me hit what they're looking for, because usually what the findings are that there's one of two things, is that a union doesn't have enough bonding insurance or the fidelity bond that they have is not the right one. So what are they looking for? Well, if any union folks are listening and their union has property and annual receipts less than $5,000, you can tune out because the requirement does not apply to that group. But for everybody else, it does. So for everybody else, the law is expecting that anybody who handles union funds or property is bonded. And by handling, what they define that as is anyone whose duties or authority allow them access to union funds or to be able to direct what happens with those funds. So it could be union officers, elected or non-elected, employees, trustees, key administrative and professional staff, or even clerical personnel, if they have access to union funds. The level of bonding that they're expecting is 10% of funds handled during the union's previous fiscal year. They don't require more than $500,000, however, and the way that that's calculated, or the way that the union would want to calculate that, is you take your liquid assets, which is the assets that can be converted to cash pretty quickly. So it would not include, for example, your property assets. So it'd be cash, investments, liquid assets like that, plus the total receipts for the year, and then 10% of that. And that's the number that's the required coverage per person. Again, the max that the DOL requires is $500,000. A couple other elements of bonding insurance that the investigator will look for is that it can't have a deductible. So none of the union fidelity bonds can have a deductible attached to it. And it needs to be made by a company that's approved on the U.S. Treasury Department list of approved bonding companies.
And if I can do a little tip in here on the bond issue, something that's kind of come to light in the last few years, surprisingly so, is that companies that are on the DOL's list are trying to sell as a labor organization bond, which, as Ash already said, has no deductible. They're basically selling an ERISA bond, meaning a policy written for an employee benefit plan, and they're calling it a labor organization bond. And they're basically starting with the shell of an ERISA bond and trying to convert it to a labor organization bond. And where we see they're missing the mark is it certainly covers the officers, but there's no language in there that provides for volunteers. And a lot of unions use volunteers. Their members, their officers don't get paid. There's a lot of volunteerism in the House of Labor. And the bonding insurance that's based on this ERISA language does not cover those people. They're not mentioned at all. And the Department of Labor has come back and said, we're sorry, but you're going to have to go get different insurance because this bond does not cover all the people that you need to have covered. So I thought I'd mention that as well, since it seems to be emerging.
Perfect. Thank you for everybody that's tuned in. You could have been anywhere in the world, but you're here with us, and we appreciate that.
Thanks for joining us. Be sure to subscribe to our podcast so you'll be first in line to hear what's coming next. Don't want to wait for our next episode? Check us out at withum.com. That's WITHUM.com.